Thanks so much, Guy. Yeah, the president touching down in the kingdom. And as you framed it, this trip is really all about oil supplies because he is trying at home to deal with the domestic problem of bringing down gasoline prices. An American that sits in Riyadh, and it's International Energy Forum Secretary General Joe McMonigle, and he joins us here in Jeddah. Thanks so much for joining us, Joe.
Yeah, great to be with you.
So we're not going to get an emphatic announcement on more oil coming from the kingdom to help the president out. But do you think that this meeting is going to mean more oil coming at the next OPEC Plus meeting?
Well, look, I agree with you. I don't think there's going to be any specific announcement on oil production here. But look, we have the top two world oil producers meeting here. So it's an historic trip. It's good for market stability and energy security when the top two producers are meeting. And I know there's a lot of focus on the president being here, but I think it's important to note that behind the scenes, there's been a lot of U.S. officials coming here over the months. I live in Riyadh. They stop and see me when they come. So this has been going on. This relationship building has been going on, even though it's the president's first trip. So I think a lot can come out of this trip, but it's just the beginning stages. I also think you'll hear a lot more on other parts of the energy business. You'll hear a lot on the energy transition, investing in energy infrastructure, and potentially you could hear something on nuclear. I understand there's some nuclear industry people from the U.S. here. That would lead me to believe there could be some announcement regarding the Saudi nuclear energy program and U.S. involvement in it.
But when it comes to Saudi Arabia adding more barrels to the market, you said U.S. officials were here. It does look like they gave a nod at the last OPEC meeting, a bit of an olive branch to heed the president's calls. How much could they add if they were to add?
Well, look, I think it's important to note, to answer your direct question, the spare capacity that could come on quickly is about 2 million barrels a day. But you're threading a needle here because you don't necessarily want to give up all that spare capacity, right? Because if a hurricane hits the Gulf Coast and you need extra spare capacity, and don't forget, we've kind of diluted the Strategic Petroleum Reserve and other reserves around the world, and so we need this spare capacity. But I think it's important that this discussion here should not just be on increasing OPEC supply or OPEC Plus supply or GCC country supply, but also non-OPEC supply. The bottom line is we need more energy from all sources, not just oil. We need natural gas, and everybody has to play that role. We need more production from the U.S. and Canada and Mexico, Brazil, and then, of course, there's the whole refining downstream sector to talk about.
Right. This is the only half the problem right now. But when you look at Saudi Arabia, they're still at the moment not meeting their current quotas. Why is that? Do they want to keep more spare capacity in the tank?
Well, they traditionally have wanted to because they view it as an important thing for global energy security. I think maybe the anomaly during the summer has to do with the summer heat that we're experiencing here and the power spikes that they have during the summer. But I wouldn't pay that much attention to that. I think Saudi Arabia and the UAE in particular have had a very good record on meeting their targets. It's been basically the other countries that, for the same reason the U.S. producers aren't back to pre-pandemic production because of a lack of investment in more upstream, and so that has to change.
I'm sure you saw the encounter in Bavaria when Emmanuel Macron chased the president to talk about his conversation with Mohammed bin Zayed. Do you think the UAE can get up to 4 million barrels a day?
Well, look, I'm happy that world leaders are becoming more conversant on energy issues. This is really important, especially as the world is in the middle of an energy crisis. There's a lot of additional upside in the UAE and in Saudi Arabia. And unlike other parts of the private sector, the IOCs, the international oil companies, the NOCs, the national oil companies are investing in new supply. And this is really, really important. But they can't be the only ones. We need Western energy companies to begin investing again in hydrocarbons. And really, there's been this not just ESG pressure, but also investor pressure who want better returns, right, from the sector, saying don't invest more in capex and give us better returns. So I think we've talked a lot to producers about increasing supply. I think the conversation has to move to the investor and financial community.
And what about prices right now? We have this recent pullback. Do you think this is going to be a longer-term correction because all these fears about a potential global recession?
I don't. I mean, I think we're seeing a tale of two markets right here, right? We're seeing the paper markets focused on fears of recession and maybe waning energy or gasoline demand in the U.S. and the strong dollar maybe. But on the physical side, there's tremendous pressure and very tight markets. I mean, the prices that the Saudis and other producers are able to charge are increasing because of the tightness in the market. You had this example of a trader on Wednesday who offered a $6 premium to Brent that couldn't find any takers. That was the highest premium to Brent in like 14 or 15 years. So it shows you the tightness in the physical market. I'm worried that, again, if we have some hurricane hit in the U.S., if we have, China demand has been very soft. If that demand comes back, and as we expect China will reopen when the Party Congress happens in the fall, I think you're going to see a lot of additional pressure on the demand side of the equation.
So what I'm getting from you is higher for longer.
Higher for longer and a lot more volatility.